Valentijn Van Nieuwenhuijzen joins us right now, CIO at NN Investment, to talk about this rally. And how much faith do you have in a rally like this? Do you expect us to see some kind of pullback?
Well, I think it's only natural to expect somewhere over the coming weeks or months to see an occasional pullback. But I think these remarkable market dynamics come only on the back of such a remarkable period in the COVID crisis that we've had last year, and the amazing rebound that we've seen in economic activity. Look at what has happened to earnings. Look at what has happened to all the macro data. That's very rare to see in any year, and that's when you get this enormous resilience in markets with all policymaker support behind it. It doesn't take away the risk, of course, that there's an occasional shakeout, but still I would say that it's probably going to be a modest one, both in time and in size. So, whether this is the perfect day or whether this is maybe on the back of the Chinese data, a start of a bit of a correction, is always hard to say. But underneath, I think there's still a lot of support for the market.
So, Valentijn, a shakeout would not be some kind of taper tantrum because the Fed actually moved sooner than the market expected?
Well, I think, in the end, a taper tantrum by the Fed, a renewed escalation of COVID outside of Asia even, and potentially a persistent decline in economic activity. Those are the three risk factors. None of them, I think, are very likely to materialize in the second half of the year. So you cannot exclude it. But if you see maybe little signs of that, it might impact markets for a week or so. But I do think that the remarkable strength in the economic data, the economic earnings, and the enormous amount of ongoing policy support for markets will basically keep on supporting the rally.
But Valentijn, so what do you buy on the dip? Are there specific industry groups that you want to get involved in, or do you just buy the index?
Well, for us so far, I mean, we've been a bit more, let's say, cautious over the summer. But we are now on this sort of dippish momentum, more thinking about, first of all, top-down adding risk, which is adding a bit of global equities, getting more cautious on your treasury exposure again, and adding in high yield and credit space. There are some elements in sectors which we like. The materials sector is one. Also in commodity space, we still have some exposure to oil, aluminum, and also a bit on carbon. We still also would now think that financials and tech are interesting. They might respond differently to interest rate dynamic, but we still think those sectors are attractive.
Valentijn, how does that positioning reflect your assumptions about long-term economic infrastructure package in the U.S.? And what if that doesn't happen or doesn't make its way through Congress in its current form?
Well, I think with infrastructure, of course, we've had the first part. Now we're debating the second. As always, you need to realize this is slow moving in terms of supporting the economy. It's important. It will support the economy over the coming years. But I don't think it's instrumental for determining, let's say, market appetite for the second half of the year. So I do think it is important, but it has a bit more of a medium-term perspective to it. But it does color the overall underlining, I think, support there is still from the fiscal side. And it's not only in the US, but this is probably the most dominant for market appetite.
How important is the German election, Valentijn?
Well, it is obviously very important, although I think also the outlines are sort of clear. It's not going to be delivering a massive surprise. The key factor will be whether or not there will be a government, including the Green Party. And that is, depending on where the polls sit today, not yet clear. Whether there is a surprise or not in, for example, the SDP's showing will probably determine that. But all in all, it's going to be interesting to see Germany post-Merkel, but all in all, I do expect sort of a stability from a market's perspective from the German elections.
Valentijn, I want to pivot to monetary policy. We just had a headline crossing the Bloomberg that Fed officials are weighing ending asset purchases by mid-2022. That's according to Dow Jones. What assumptions are you making about when the taper starts and ends?
Well, when it ends, we'll see. There's a long way to go. But I do think that, whether it's the FOMC minutes or Jackson Hole, that's where we're going to get really clarity on when it will start. I think the market overall expects it, to be part of the dynamics for the next 12 to 18 months in the market. it's a reason for us that we also getting a bit more cautious on the treasury market again, despite the rally on Friday after the consumer confidence data. So we do expect it to start, let's say, towards year end.